we have an algorithm that's going on behind the scenes. This is very well tested. The results it's generated now are outstanding. It's a very strong algorithm. Just think of it in terms of two goalposts. All suburbs are changing, constantly. The data, the on-market activity, etc. is changing constantly. Suburbs are moving in and out of those goalposts. They are either approved according to the algorithm or not, and that is changing quite consistently. Okay? Now, a suburb might come into that buying window, stay there for generally, in between those goalposts for 3, 6, 9, even up to 12 months, if sometimes a little bit more, and then move out. It might be just edging into those goalposts and then edging in and out consistently, or it might be really strongly within them. Now, generally, we are first into these markets. Our algorithm is very strong at being leading into, a front runner into these markets. So when we enter the markets firstly, Perth 3 years ago, we were shouting Perth from the rooftops. We were seeing the deals and the calibre of those deals. We were entering into buying windows, but nobody was talking about Perth. When we might be speaking to our clients about Perth, they hadn't really seen the comfort of a news article or talking to people at a barbecue about Perth, and they were very hesitant to enter it. But we were extremely bullish of the data and the research and the calibre of the deals there. There wasn't as much demand in that Perth market on the buy side as there is now, so the calibre of deals was very strong. But you had to eke out on that ledge and stick your toe over without the support of the masses behind you. So definitely when we are entering into a buying window, we have less overall demand, but less comfort from others following alongside. And as you're in that market longer, we might have other buyers groups, it might be mentioned more in the media. Definitely the Perth market's on everyone's lips now. We are still acquiring properties there, but there is far more demand, right? So definitely it is true, generally, the earlier we are in that buying window, the more we can control the dialogue, we can control that market. So it is a very normal preference to say, I would prefer to be earlier in the buying window as opposed to later, and that's coming down to your preference to be more of that forerunner and not needing as much comfort and market confirmation. Now, so that's fine. I will say, with our recent data release and the new data capture systems behind the scenes, we do have some very strong emergent markets where we are in the earlier stages of that buying window. 600 plus in Perth, as I just mentioned, Brisbane, Adelaide, once again. Believe it or not, there's certain markets in Adelaide that have been dormant for a few years and are now just starting to fire up. And also the Sydney market. So there are a couple of regionals as well that have just started to emerge. Okay, so we can definitely focus on those areas where the buying window is just opening. When we are looking at a market, we are analysing every single property on that market, and we're doing that every day. We have internal software that enables us to do that. We are constantly re-evaluating each property. It might have more distress, as the listing is continuing, and then it reaches that point where we feel we've got enough chance to negotiate a good deal and we might proceed at it. But the important point here is we are analysing every property every day. And then we are applying our due diligence checklist. So we might be ruling out, it's actually only about 1 or 2 properties out of every 100 on the market meets our due diligence checklist. Public housing, power lines, overlays, floods, waters, fire, which is another question we've got today. Things like pools or usage of floor space, slopage of land, noise, top side of the road, bottom side of the road in certain locations. There's many different things that we are analysing. And so we are looking at all these properties, and the vast majority of properties are rejected before we would even consider them for a client or even appraising them. Those ones that meet and pass our shortlisting process are then valued by a qualified valuer. And then if there is fat in the deal, if it is meeting our minimum ROI percentages, it is then put forward for assessment. So, there are it's about 4,500 properties in our approved locations we are assessing each week. And there are only around 40 to 50 of them which are even at the standard that we would consider making an offer on it, let alone you as a client accepting and agreeing of them. So, it's a really great collaborative process. We're going through a very strong and I guess end-to-end process of due diligence to find those diamonds in the rough and then putting them forward for our